Welcome to TradeTheMBI.com. This is John. This report is for the 21st. And we had our deep red, but we liked what the situation was. We were expecting a dip that would take us down here to the red line of the extreme histogram, which is shown in magenta here when it comes down below it. And the low, 1945 and a quarter. What did we end up with? We get down to 1942 and a half. So perfect with that. Did not improve very much though on the extreme histogram for given the move. So there was just a lack of resistance. But here's the problem. We made the higher peak fine. We expected the higher peak of the greens to give us a boost. Turned out to be quite a significant boost. But we didn't get any corresponding improvement either from the red, and we got just modest improvement from the steel, and that's not great. As far as a continuation, this pattern tends to produce a little bit more weakness over time. If we get the sudden turnaround from the green, potentially we can move. But I say at this particular point, wow, I got to look at the 50K because that is a negative, not a positive, which bizarre given how big a move that was. So then I look at the 50K. Yeah, I got nice rising red within that, broke into a new zone that should give us carry through. But now I've got cyan above the green. That's bearish at this peak moment. Can that produce less of a dip? Yeah, I'm not looking for huge drama here, but especially since we satisfied the dip below the red line with the overall drop. Needless to say, though, I'll be definitely looking at potential 50% retrace coming back into there, which is interesting because it'll be right where our entry was. Now, back over here when we had, recorded this tiny little loss, we knew that this was coming back to retrace this anyway, even before. So we were able to capture gains within that one and wouldn't even take this entry because it just didn't look attractive from the deep red beginning at that particular point. And sure enough, it failed. So not a big deal with those. Yes, they still count on the automated setup, but most of us were able to avoid them. And I showed you my trades as we were going through on a lot of those that it just didn't have much of an impact. Now, where are we currently? 461. If we look at our performance report, we're barely off the highs. The peak high was, let me see if I can get to it there, 469. So currently 461, this would already take that back over equity highs. So even after having two losses in a row, what it does show though is the abysmal win rate, because we're not worried about win rate. We're worried about profit factor and how much we make on those moves that we get going and the trend moves that follow through. And so that becomes more important. And then we end up looking at our adverse excursions where we're trying to look and gain these huge big wins versus maintaining very controlled and very static losses within the overall configuration. But that's separate of what we're talking about for just our general view of what we expect the market to do in this particular case. Now, if we looked at our 5K for the ES, and some people say, why ES? Well, this is futures, a little bit more liquid and able to see it over a 24-hour period. But yes, you can extrapolate this to the SPY. No difference whatsoever. And you can see from early on, let me just scroll back here a fraction. So we can get the start of the day. It came down. It was all green. This happens to be which program? Buy, sell, C. Yeah. You can even do A on here, and it shows it pretty clearly as well. But we had nice buy configurations that set up all at the same time right in here, and it just continued from that point. Yeah, that 1952 was right about where I entered with a large portion of what I was doing. Then I scaled out here as we started getting into the deep red. I would expect that to get retraced coming back forward here. And you can see we have plenty of positive extremes taking us all the way back over here to that 1961 level, which is exactly what I just mentioned on the 50K. So you begin to get this continuation of suggestion, and that's not that horrible coming right back into there. It's pretty contained. The issue becomes if buyers really continue to fade like that, yes, we'll get oversold, but you may attract more shorts. And this, what we're really seeing is just a lack of short interest for the most part, which is why things haven't moved a whole lot. You just had people pull out right here, and then when it seemed like things stabilized, they moved back in. That's all that took place. You can see NASDAQ, not as bad. You've got a little bit of a pivot up with the steel. The problem is if that pivot's lower, you're going to end up with significant lower pivot from the steel. You would need to see Rising cyan though to get above this peak, and that will give us a turnaround move there. This was actually fairly bullish with the extreme on the Nasdaq. So again, we've been seeing this for a little while now, a divergence between Nasdaq, S&P, as well as YM, where the Nasdaq and the YM or the Dow have been on extremes, and the S&P has sort of been the moderator of the two. But this is also not pretty from a Dow standpoint. So while it's at its peaks, we expected it to come back very close to our target range, which was 16,830. What was our low? Yeah, 16,835. So it was just a matter of you just have to wait for these things sometimes. I know it seems crazy that it works out this way, but we have been noticing some very interesting changes in the algorithms. I've been adjusting over the last couple of weeks as I've been seeing them develop. And it's been interesting because, like I mentioned before, the central bank involvement in what we were seeing from liquidity setups was unique. I'm not going to go into it because it gets into some detailed math, but very interesting to have discussions with people in Venice about it. And then I'm also going to be doing the same in Rome next week. And it's just an interesting thing that I'm not the only one out there utilizing a stealth form of math that just recreates what some of these other larger institutions are just trying to break up to make obfuscated. Positive extreme, we're expected to retrace on TLT for that one within there, but overall still very positive from its move. Interesting, you can't see it, the cyan moved straight up with that, so it's really put it right back at a convergence at +7, and the previous peak was right here at -0.53, so it's already made a higher move on the cyan, which would suggest maybe a little bit more bearishness for bonds right there. And the TLT USO still within the negative red on that setup, though that was a nice positive strike up there. You need to see the red move over. We'll still get off the buy, and the fractals all met their target. We got a new one right here. Yeah, it's a series buy. Just another fractal setup, which at least gives you a target is what it mostly does, and it's just a factor of the ATR higher, which is just the average true range. Gold, yeah, we knew we were in the deep red from there and plummeted from that. And again, we were expecting a dip back down to the red line, which would be right over there after the one-day move of the cyan candle, which we love to play those cyan candles because you tend to get gaps with those, and they skyrocket. Then they fade fast. The euro, we weren't expecting anything effective below the red line, so that's going to get retraced to there, and it's still in selling. You see, look at this is exactly what we're talking about for what we're seeing on the regular market. And the same thing happened right here, where it starts to break down and the spread gets wider, and then it just breaks into lower zone. In this case, with the S&P, we've broken from the above -7 to below it, which should portend weakness. Now, if it doesn't generate huge amount of weakness, fine. I'm not going to object to it, but just to be aware of it so that you know what to expect. If things start to go ugly, you're not going to hold on and think that it's going to, turn around. X, we expected it to get to its targets. Get that one right there for the 27.99. Didn't quite get there. What was the overall high? 69. Got a little overbought within there, and now you have the steel out of the safety zone. Did rise above the cyan, which is still bullish overall, as well as with green in that riding. What I'd be watching for is a dip of the steel coming back below. Cyan would be just a moderate negative, but at this particular point, it still looks good. CLF has been showing some improvement. Nice little white candle there, which will become a newer version of the MBI. I think this is, buy sell A on there. To get a little overbought, expected that to retrace back to the 1505. I think we have intraday setups from it too. Yeah, shot up, retraced most of it, and that was just what you were looking for. Coming back, did it both days too. It was very interesting to see that take place. And then nice pivot up. Every time you always want to look for that steel coming from below and crossing above, and then you know that you're going to have a little bit better run with your crossovers of green over red. Likewise here. Started back over there, and then once it boom shot up, crossed above right about here, actually began. Right as you got there, you have the nice green pivot. You're just about to cross over with the lower. This is another feature that probably going to have set up for programs. A member had talked about this. When you get the wide enough spread on the cyan to green, particularly when they're in the extreme zones, and then they pivot lower, usually becomes a nice buy signal, which would have been right about there. Just throw that one out. Why not? Let's take a look at, instead of a blank screen, the Omega readings. This happens to be the NASDAQ. You can see still a lot of sell signals within the overall, despite having such big moves. You would expect the S&P to be all just, wondrous new buys, and it's quite a mix. Healthy, but not as rosy as you would think, given the reflection of what we saw in price. And some of the high flyers did okay. Scroll through the rest of these, and again, you can always freeze them at will and take a look on your own. I encourage it. Let's get up some of the alert chart ones. Apple, we like the fact that it was dipped well in the safety zone. We did have a little concern, though, with the cyan rising above. The fact that we had reached the ABM and supported off there was a good sign. We needed to see that stayed above it because, well, positive extreme-wise, we were expecting just to come down to around the 92 range. I think the low on the previous day was 92.50, so it's pretty much in line with that. We hadn't dipped below the red line, so we're not expecting any kind of a breakdown, but overall, okay. Not something I'd jump on just yet. It's been within a buy overall for quite some time, so as long as it's above that green ABM, for those of you with the indicators, it's not a big deal. Intraday trading, I would just follow what the 15-minute alerts do. Amazon, we've been liking that. Look at that, how far below that cyan is. Clear runaway with the green above. Yeah, you dip below the red, but that's not as big a concern when you have the green riding that high and you've got the cyan so far below. Yes, when we do get our sell, we know what the retrace will be. It'll be coming back down to the positive extreme here. Not there yet. Don't have to worry about it. It's nice when you don't have to worry about it. Baidu, much more, well, it had made the nice improvement coming back up, and now you've also got the cyan has been below, at least even from the previous day, so that presented a nice buy opportunity even within the red, but we don't expect that to break out too far. FAS had been kind of our benchmark. We've been looking to see that it stays in strong stead to maintain the market. Now, deep red showed up. That's not wonderful. Came back slightly, you got the green, but you're still sliding on your red and white, and you have cyan above. The positive part of it was that you have the dip that was coming back towards the low retrace here, but on higher extreme. And then once we had the improved pivot, which opened the morning, which was a small gap up, but still expected that to continue, and it did nicely. So that worked out fine in conjunction with the market. Again, watching the 15 minutes, and that was pretty straightforward. Facebook actually had the rise above here with the green over the cyan right there. Interesting that the move up would cause a dip below of the red, below the -7 here. The nice part has been the rising extreme histogram, so it hasn't been overbought or anything, just kind of been in a consolidation. It doesn't look expansive in the sense of, a major breakout there, but it's fine. It's not looking ugly. And Google. Google was okay. It wasn't a good thing, with the earnings and that. It just didn't look attractive to expect a huge move. Yes, it was a higher extreme. So from that standpoint, I'm like, yeah, I'm not worried about it. It doesn't look like it's going to break down. It just looked to be more nothing than anything. And, I didn't think it was worth the risk on a premium standpoint looking for an option. So I was like, if you have the stock, fine. Otherwise, sell time on it, which, at the 600 level would have been fine for the week. And that's just a different approach. Following the 15-minute charts on it was fine. I mean, it exploded and it was great and it was all green and not an issue. Netflix. Turn around with the cross there. Again, we weren't liking the fact that it was just underwhelming. There was no crossover continuation with the red. In fact, it had faded. Now you've got cyan back above. So even though it held up with a decent market, it still doesn't look like a nice move. Sorry. Nothing I can do about it. We had plenty of nice runs on Netflix, so no real objection to it. PCLN, yeah, that's not pretty. So this is more like what the market's doing. You come up and then fades below here, and that's not a great sign. It's actually not positive. Now, it got support with the ABM right at the green line, but the fact that it didn't turn around, I'm looking for the potential that it could break out below these lows. So that's not terrific. Tesla had been okay. You've just been in this deep dark red here. The green rising had supported it with the buy setup. It finally got above the cyan, but unfortunately on this up move, cyan overtook it again. So I would expect that that's going to inherently get a little bit of weakness, and if it breaks through from that, we would expect to see the red move into a new zone above negative 7.5, and that's just some key benchmarks to look for. Otherwise, it's just blah. And Twitter actually had looked good with the crossover. The problem we were seeing was that we didn't have steel shooting above cyan, and you still don't have it. So again, I expect that that's probably going to revisit some more dips back to the low, especially since you did dip below the red line with the extreme histogram here. So again, nothing exciting from that standpoint. So a lot of the stuff just looks mediocre at best, is about the only way to describe it, kind of a summer doldrum at this particular point. But kind of a bizarre up move on the euphoric for the SP, so we'd expect a little fade of that. So don't be afraid to take some gains, and then you can just have a buy stop above where you've taken the gains and negotiate back and forth based on what the individual readings are during the day for those of you with the indicators, and even those of you watching the 15-minute SPYs. You also have the 78-minute. So those were all clear signals that came in at just the right point. Let me show it. You'll be getting new passwords for the transfer. You'll be going to the same website, tradethembi.com, but it will link you here when you go to your member login. You'll be getting a username, password, and this will have the new features, just trying to simplify things, and then also be adjusting the YouTube channel so that you have the most up-to-date information available. So that should be exciting. Lots of little work to do on that, but we'll get it there, and then it'll be a complete transfer over to that web look. As always, though, continue to look for me in private Twitter feed, Stock Twits. Trade well. We'll talk again, all during the week.